Well, welcome back. We're going to have a look at the short topic of ownership of assets. When we talk about ownership of assets, we've got four main issues. One is what assets are owned by the partnership. Then how much of those assets does each partner own, as the partnership itself is not an entity, it doesn't own the assets, the partners own them, but in what proportions? Can the partners use these assets personally, and can the partnership use assets but not own them? Now, if we go back to the Partnership Act, you'll find this is covered in Section 23 of the Act. Now, if we look closely at Section 23(1), just blow it up a wee bit here, all property and rights and interests originally brought into the partnership's stock. So those are the original contributions by the partners. So at the start of the partnership, or when a person enters, they agree to contribute certain assets. This could be money, it could be goods, it could be assets like trucks, it could be contracts like leases. Those things are brought into the partnership stock or acquired on account of the firm for the purposes in the course of the partnership business. So the first part's the original material brought in. The second is those things the partnership just buys in the ordinary course of being a partnership, which would include all its inventory, its assets, and its contracts. And these things are called partnership property. Now, what it also says here is these must be held and applied by the partners for the purpose of the partnership exclusively and in accordance with the agreement. What this means is if you agree to join a partnership, you are contributing assets and you lose ownership of them in entirety. They become partnership property. Now this answers our first question: what assets are owned by the partnership? And Section 23 gives us the answer to that it's partnership property, contributed assets, assets bought by the partnership. Now, the question below, if we jump 1, 2, you'll also notice in Section 23, it said they must be used exclusively for the partnership or according to the agreement. So the basic rule is no, must be used exclusively for the partnership. Or by agreement. So within that, you can change those rules. One thing to be very clear of is if you refer to the earlier recap on Section 13 and 15, if you're using partnership assets personally and it's with the authority of the other partners, are there any liability issues? Potentially that could be the case. If we go back here and ask the question, how much does each partner own? So Section 23 didn't cover that. It didn't tell us anything about how much partnership each partner owns. It just tells us what is partnership property in the first subsection. You'll notice below it has specific rules relating to land and co-ownership of estates and land. Because land's a significant asset, this is kept largely separate. Now, the rules for partnership, as in terms of default rules which you can change, are contained in these sections. Section 27 is one of the primary sections for this, and you'll notice in Section 27 that all partners share equally in the capital and profits of the business. What that means is every partner has equal ownership of all assets of the partnership. This would mean that the default position is they are equal ownership. But we know that this section is subject to any agreement between the partners, therefore we can change this. So in terms of how much does each partner own, the default rule is equal. They are co-owners. This rule can be changed. but it's not giving them separate ownership and asset. What Section 27 said was they get to share equally in the capital and profits of the business. So this means on dissolution of the business or one partner leaving, you would say what is their monetary share of the assets, and that is the amount they're paid out. You could potentially have an agreement that says I get a truck, you get some machinery or something like that of that nature, but the basic rule is very clear. It's equal ownership, and the rule can be changed, but it doesn't give them separate ownership. Now, the last question here is, can the partnership use assets but not own them? This isn't specifically answered by the Partnership Act, but clearly the answer is yes. A partnership can lease assets, it can license assets, it can hire assets, and it can hire those or lease them from any party, and that includes partners. So we could have a situation where the partners, let's just call them options, to put assets into the business. Now, be careful with that phrasing, actually the two puts. The options to put assets into the business, or probably a better way to put that, is to make assets available to the business. Because we just really want the business to have the assets it needs to operate. It doesn't have to own them. So we could contribute per Section 23. We could sell and have a debt back. That way, if the partnership ends, they're owed the money, but they're not actually owed the asset. They're only owed the money. So if I put a truck into a partnership and the partnership fails, I'm owed the value of that truck. And if there's no money, I get nothing. So it would be better if I actually owned the asset. There, I could lease an asset to the partnership, which means to all the partners. If I lease an asset, it's like going and hiring a motor mower in the weekend. Hireage is just another form of lease. So I don't own the mower, I just get the use of it. So of course the hiring company still owns it. In the same way, a partnership could lease an asset from a partner, and that partner would continue to own it. The only problem with this is that the partnership will often have no assets of any value at all if all the partners are leasing things to the partnership. That might be okay. That's a question for the partners to decide. Okay, so those are the main issues we need to consider in ownership of assets.